Welcome back, everyone. It's August 3rd, 2020. I'm Jerry Hall, and here's the view from Costa Rica. A quick peek at the markets is the sharp sell-off that we saw was short-lived, and we're back in the green. This is wonderful. And today, I want to walk you through why I believe this time is going to be different than previous upward trend is going to be different than previous upward trends that we've seen in the past, only to be followed by, well, periods of long, steady downward trends with consolidation. Something is brewing. I'm going to make a case for what I believe that is, and it's all coming to you right now. Let's start with, this is an article that was put out. Many YouTubers have already covered it, so I'm not going to go into it. The point is, the G30 is literally a high-powered think tank. These are people from finance who have had very prestigious positions, who've come together and now do research and get paid for their thoughts. Wonderful business if you can do it. This is the actual PDF of the report that they put out. And I'm not going to go into details about the report because it's been covered over and over and over again. I do want to draw attention, though, to what I believe is one of the true elements of value, and that is it's the people who put together the report. Take a look at this steering committee and who these people are and where they are from, their former positions. These are, monetary fund academics from Harvard. These are former governors of reserve banks of countries like India and Mexico and Japan and China. These are economic, financial thought leaders from the world who've put together this report, and they speak highly of Ripple. This is extremely good news, but this is just to prime the pump for the rest of what I want to take you through in this video. So let's move on. So here we have a nice article, and it's talking about index fund bubble, arguments for and against. For those of you that might not be familiar with this element of the market, index funds represent a low-fee way to invest in a basket of performers. Passive income has been on the rise for the last 15, 20 years in the investment world. You put your money in a fund, the accumulation of that fund generates a return. As an investor, you get a return on your investment. Passive income is what we all want, right? Those of us that are digging into POS protocols like Cardano and Tezos, etc., we're looking to get a return on our investment regardless of the price of the underlying asset. Well, passive investors want the same thing, whether they buy a piece of real estate and receive rent in a higher denomination than the expenses to cover the cost of that property. We all want reoccurring income. Passive indexation has been the rage in investing to produce that result. Here's one of the issues with passive indexation. It's eloquently described by Mike Green from Real Vision in the Real Vision Daily Briefing from yesterday. Go check this out, but I will give you the Reader's Digest version of it here, and that is this. Passive indexation is a process in which you disregard value and you disregard too much forward-looking valuation models. You are concerned about where it is today and what it's been doing the last 30 days, that type of thing. Passive indexation, the primary drivers of that asset class are pension funds, 401k plans. Well, if a company, or if an index, for instance, one that is heavily weighted in the FANG stocks, has a record of going up, then a fund will continue to invest in it with the new funds that come from the contributions of the pension or the contributions of the 401ks, and they will invest in that index, regardless of external economic conditions. And it's dangerous, according to Mike Green, it's dangerous to operate that way, because what it does is it throws real valuation out the window. It's just looking at the price of the stock today versus where it was a week ago. So if something's trending up, you keep pouring money into it, regardless of the underlying fundamentals of the index and the companies that are contained within it. To make a long story about this very short, a tremendous amount of money continues to get poured into these indexes, and there's no real valuation to support the price levels that the shares in the index are being maintained at. It is a recipe for disaster. Don't think for one second Wall Street isn't keen to this or understand this. Mike Green just eloquently stated it, but it's in conversations around boardrooms and at trading desks all across the US. Keep your eyes open. Value does matter, and passive indexation investing doesn't take value from a fundamental level into consideration when deciding to put the money in. It's a recipe for disaster. But these practitioners, these people that are in the game, they are becoming very clear to this point. Well, why is this even important, Jerry? You're asking yourself. Well, this is why. I just got this morning from Seeking Alpha. Now, Stephen Fierlio is somebody that I have seen a lot of his work. He is not at all a risk taker. This guy is always looking for value. He is what you would call a value investor. He'll break a company down, cash flow based off of revenue versus price per share. He knows all the metrics. He's looking for companies that are solvent, that will continue to have revenues that allow cash flows, that have manageable debt loads, etc. So when Stephen comes out and writes a piece on cryptocurrency, which is not his quote unquote industry that he covers, is worth taking note. Let me read for you the summary in case you're listening to this while you walk. Summary, point number 1. The OCC is given the green lights for banks to hold cryptocurrency for its clients. Point number 2, XRP provides real-world utility with 3 to 5 second settlement with payments and its native currency on the Ripple platform. Point number 3, Ripple is extremely ambitious. Ripple is extremely ambitious, which is a typo because it should be ambitious, as they try to evolve the entire financial global infrastructure to make it seamless with payments. Point number 4, XRP could be the opportunity of a lifetime or a flash in the pan, but for speculation purposes, it has real potential. Stephen, I could not agree even more. He goes into that. This is a very in-depth piece. He goes into talking about Bitcoin, the bull run of 2017, the exposure that it got from network markets and publications like Bloomberg and Forbes, etc., Wall Street Journal, just to name a couple. Goes in to talk about some of the fundamentals of XRP, brings up the coin market cap with some history, then does like a deep dive into Ripple, which he really goes into talking about the Ripple business model and what they're trying to do with working hand in hand with the existing financial legacy system. It goes into talking about its strong suit, which is speed, efficiency, reliability, and the fact that you don't get a lot of error messages, and the fact that you understand everything up front before you utilize a trade, which creates certainty. And these are all things that people who are in payments, they want them, right? It's the value proposition of RippleNet. He goes into talking about comparing speed and volume and quantity of transactions against some of the other larger cryptocurrencies, ETH being one of them. He brings up a Ripple slide. Now he also goes into playing a game of connect the dots with the recent news and brings up former weirdnesses from Jamie Dimon and Warren Buffett, but he also goes into starting to talk about how this OCC document opens the door for the financial legacy system to really get involved on many levels, not just the custody issue, but the transaction issue and the sales issue or distribution to retail clients of the bank with various crypto assets. Very, very well put together. Comes down here, also gets into the other projects that are in and around the Ripple protocol. So Pay ID and what that brings to the table. He even goes into talking about Spring and how that is a incubator for new and exciting applications on top of this Ripple protocol. He goes into discuss in great detail the P2P payments platform that, for instance, apps like the Sum app from, we'd say, Wind is developing, and the Coil integration into WordPress for micropayments. Very important. I want to read for you, though, his conclusion. It's about 3 paragraphs long. Bear with me. It's worth every word. Conclusion. I have no idea what will happen with cryptocurrencies, and they could become non-existent in the future. What I do know is they haven't disappeared yet, and there is real money behind these digital assets. There could be many winners in this space or just a few. With banks getting the green light to hold crypto for clients and the other news which has come out, I am going to speculate that crypto is here to stay. I like the the XRP to US dollar the most because of its instant settlement, the real world utility of the Ripple network and the projects Ripple is creating. I plan on holding multiple coins for the next decade to see what pans out. Society continues to evolve, and maybe crypto will be part of the banking evolution. If you go back to 1985 and told somebody what banking would look like in 2020, they would think you're nuts. XRP USD was in the high $3 range during the bull run of 2017. Since then, a ton of progress has happened. BTC went to almost 20,000. I wouldn't think it's crazy to see XRP at $5, $10, $100, or even $1,000 in the next decade. If Ripple's projects pan out and XRP is adopted as a main vehicle of moving money across its network, wow. This is all speculation, but I missed BTC's parabolic rise. And if XRP has its day in the sun, I will be part of its bull run. I like his words. I like the article that he wrote, but what it really signifies to me is that more and more of the existing capital markets participants, whether they be practitioners, researchers, even to some degree administrators, are recognizing and publicly stating this is real. We are going to see allocations from folks like Stephen. Don't be surprised in the next 2 years if you hear Warren Buffett has taken a stake in a company that uses or works with a digital asset. Value is value. Capital always flows to value in the end. Folks, thank you so much for your engagement. Hit me with your comments. Tell me what you see coming down the road. Do you think Stephen is off his rocker? Or do you think Stephen's finally one of those traditional legacy market guys that has opened his eyes, has done the research, and now actually sees what you and I have seen since we've gotten into the space? Hit that subscribe button, hit the notification bell so that you'll be notified for my next video that I'll put out whenever I put out the next video. And until next time, everybody, from Costa Rica, Pura Vida.